For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Today we will take an in-depth look at where Palantir Technology stands compared to other stocks frequently discussed by Jim Cramer. Cramer, a well-known financial commentator and former hedge fund manager, often shares his perspectives on various market trends, company performances, and economic policies. During a recent segment on CNBC's Squawk on the Street, he revisited the ongoing discussions surrounding tariffs and their impact on the broader economy. He argued that the Trump administration must refine its messaging to help the average American better understand the reasoning behind the tariffs and how they affect both domestic businesses and international trade. According to Cramer, American-made goods frequently face trade restrictions and unfair policies in global markets. He emphasized that while tariffs are often viewed as a tool to protect domestic industries, their implementation and the administration's communication strategy have been lacking in clarity. When asked about his stance on the issue, he responded by saying that there are an extraordinary number of tariffs imposed on the United States. The situation is incredibly frustrating, but there is little effort to explain it. I'm aware of numerous tariffs levied against American products. It is astonishing how many exist. Nearly everything is subject to tariffs, yet the president simply states that action will be taken. But why? If people had access to the same information he does, they would likely agree that the situation is unacceptable. I stand with the president, but the issue is that there is no transparency, no comprehensive list or effort to educate the public. This response highlights a broader concern that many economic policies, while potentially beneficial in theory, are not always presented to the public in a way that fosters understanding. Cramer went on to elaborate that only a select few individuals truly grasp the full extent of tariffs and their impact on international trade. He pointed out that for the average investor or consumer, the concept of tariffs might seem abstract, yet it has tangible consequences for businesses, supply chains, and pricing across industries. Cramer then shifted his focus to a recent analysis released by Bank of America, which downplayed concerns of an impending bear market. He expressed a positive outlook on the report, stating that he found the insights reassuring. He also discussed a shareholder letter from banking executive David Solomon, in which the chief executive officer shared his thoughts on regulatory changes in the financial sector. According to Cramer, many banking executives had initially held an optimistic view that financial regulations would be eased under President Trump's administration. However, that expectation did not align with reality. Cramer noted that Solomon was among those who did not anticipate the lack of deregulation, underscoring the broader miscalculation made by financial leaders. This misjudgment led to shifts in investment strategies, as firms had to navigate an economic landscape that remained more regulated than originally expected. Recognizing that his comments on tariffs might be misinterpreted as outright opposition, Cramer clarified his stance. He emphasized that he may agree with the administration's objectives but takes issue with how the policies are being communicated. In his view, the lack of clarity creates unnecessary uncertainty in the markets, making it difficult for investors and businesses to plan accordingly. The conversation then transitioned into a broader discussion about market positioning and how investors are assessing the risk of an economic downturn. Cramer provided further insights into the changing sentiment within the stock market. He said, "Here's the reality. There are businesses out there generating significant profits, yet their stock values are declining alongside companies that are struggling. Up until 8 weeks ago, a large number of companies were performing well. That is the current scenario, an atmosphere where people are hesitant to make purchases, travel, or spend money. Previously, there was strong market momentum, and now that has shifted. People who once planned trips are reconsidering. This situation is not just about tariffs. It extends beyond trade relations with France, Germany, or other nations." He continued by discussing potential tariffs on the automotive industry, noting that the administration has considered imposing tariffs on vehicles from Germany, Japan, and Korea. The reasoning behind these measures, according to Cramer, is that these countries impose minimal tariffs on American-made automobiles. However, he argued that if such tariffs are going to be implemented, there should be greater transparency. The government should provide clear details on what tariffs are being introduced and why, rather than rolling them out in a fragmented manner. Cramer explained that this unpredictable approach to policy announcements creates market volatility. Investors might see the stock market rally to 5,600 only for that momentum to be disrupted by an unexpected announcement. These sudden policy shifts can have a cascading effect, leading to market sell-offs and heightened uncertainty. policy. He criticized the way these announcements are framed, often portraying specific countries, such as Korea, Germany, or Japan, in a negative light rather than fostering constructive discussions about trade policy. Amid this broader economic discussion, Cramer also touched upon Palantir Technologies, a data analytics and software firm that has been a frequent topic on his morning show throughout the year. He's been consistently vocal in his support of the company's chief executive officer, Alex Karp, praising his leadership and vision. Additionally, he expressed optimism about Palantir's potential role in supporting Elon Musk's initiative, which aims to cut costs for the Pentagon. However, despite his prior enthusiasm for Palantir, Cramer has recently adopted a more cautious stance. The company's stock has experienced a significant pullback, declining by 33% since late February. As a result, he has been more reserved in his commentary on the stock. Nonetheless, he still acknowledges Palantir's strong position in the media and its ability to maintain a prominent presence in the market. The companies that are currently leading the market will eventually lose their momentum, except for Palantir because they dominate the media. This statement suggests that despite the stock's recent struggles, Cramer still sees Palantir as a company with a unique advantage. Its strong branding, strategic partnerships, and government contracts position it differently from many other firms that might struggle in a volatile market. As always, understanding the broader economic landscape is crucial for making informed investment decisions. Whether it be tariffs, regulatory shifts, or company-specific trends, staying up to date on these developments can help investors navigate the ever-changing market environment. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.